We've just had the latest earnings from Tesla. Yet again, they've beaten expectations. Here's the stock chart getting really close to all-time highs. So are we going to see fresh all-time highs for Tesla, or might now be the time to take profits? I thought it'd be interesting to do an update on Tesla, given that just yesterday we had the latest earnings from the company. Here's the stock price over the last 18 months or so, going from about $100 in March 2020. Those all-time highs pretty much at 900 in January of this year. And here we are again, trading at about 850 at the moment, so not too far away from those all-time highs. So as usual in this video, I'll talk a bit about those earnings, why they were so good, analyst expectations for the stock, the levels to watch, then we'll come back onto the chart and look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time round, let's take a look at Tesla on the stocks channel, given that we've just had their earnings yesterday after the closing bell, third quarter earnings for Tesla. So let's do an update. So as usual in this video, I'll cover those earnings, some of the analysts' outlooks for Tesla, the levels to watch, then we'll jump back onto the platform and take a look at the charts in a bit more detail and see what the technicals say. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different analysis throughout the week. But let's get into it. Let's catch up with these Tesla earnings and have a look at the stock in a bit more detail. So just in case you've been living in a cave for the last 5 years or so, Tesla is the electric vehicle and clean energy company. A great performance by their stock over the years, led of course by Elon Musk. The company sold 500,000 electric vehicles in 2020, and the Tesla Model 3, the cheaper version of their electric vehicles, is the best-selling EV globally. So we've had third quarter earnings released just yesterday, record revenue and record profits again from Tesla, so really good numbers. The market was expecting earnings per share of around about $1.70, and expectations are where analysts, will put their forecasts in, and what tends to be more important rather than the absolute number is whether the company beats or misses on earnings. Tesla beat expectations with earnings per share coming in at $1.86. Now there's a global chip shortage going on around the world that you may be aware of. It's affecting all sorts of industries. And the car industry is not immune from this. So lots of car companies have had to rein back production while they're waiting for these chips to come in. So that's affecting their sales. Not so for Tesla. So Tesla sales rose during the quarter despite this global chip shortage, and the company ended up delivering 241,000 cars in the third quarter. If we look at traditional ways of valuing companies, with companies the likes of Tesla, it perhaps doesn't work so well. But if we look at, for example, the price to earnings ratio for Tesla, PE ratios, traditional way of valuing some stocks, Tesla's PE is around 450. Now compare that to another car company, Ford, for example. Ford's PE is around 20, so a massive difference in price to earnings ratio. But again, that's reflecting investors' expectations for where the stock could go. So perhaps doesn't make too much sense when looking at a company like Tesla, but I thought it was interesting to just compare the two. When it comes to analyst expectations, they're bullish, but they're not overly bullish. Bank of America has got a price target of $900 on the stock. Morgan Stanley, their price target is pretty much the same as well. Considering the stock is trading around $860 a share, that's not really that bullish. Okay, they are positive on the stock, but I think many investors would expect to see perhaps even further gains from Tesla following these great results. So we've seen, again, a strong recovery over recent months. The stock price has moved back to within 5% of the all-time highs set earlier this year. It's up 22% for the year to date, Tesla stock. Before we look at the technicals and the chart, let's take a look at some of the numbers, then we'll jump back onto the platform. So the obvious next hurdle for the stock, the next target, is those all-time highs. Let's call it $900 from earlier this year. I think if we break those, then we start looking at, it's just psychological levels, with I think $1,000 being the next intermediate target if we can clear 900. On the downside, lots of support left on the way up from this recovery that we've seen over recent months. For me, the next support on the way down is coming in around $800 psychological support. But as usual, to put some color on these numbers, let's take a look on the charts. So let's start things off. We've got this longer term trend on Tesla. We'll come back to that in a second. I thought, first of all, let's take a look at the 20-day moving average. So a shorter term moving average. We get buy signals when the price moves above the moving average, like we had here in August of this year, and sell signals if we go back to February of this year when the price moves below the moving average. The latest buy signal we had was that move in August. The price has come back close to the moving average since then, but the moving average has done a good job of providing almost sort of a floating support for the price. So the moving average at the moment, the 20-day moving average, is coming in around $800. So it would take weakness below there to suggest that the moving average is giving a sell signal. So all positive from a moving average point of view at the moment. If we take a look at the RSI, not surprising given the move over the last few months. I mean, the stock has gone from 650 in August to 850 today. So in a couple of months, a $200 move for the stock. It's a big move. The RSI, 10-day RSI here, has gone very overbought, on the way up. The most overbought it's been. We've got to go back to January of this year to see the stock this overbought on an RSI point of view. As I often say, in strong trending markets like we clearly have had with Tesla, RSIs can give signals far too early. But perhaps it's something to bear in mind that it is at an extreme up here. But let's take a look at the trend. So we've got this trend going back to the March 2020 lows when, of course, plenty of stocks got hit as the coronavirus pandemic really started to spread. This trend's done a great job on the way up. At the moment, that trend line is coming in around $734. So about, 15% below where we are now. So even if we were to see the stock sell off from here back to, let's say, $750, $800 for the stock, that trend is still up. So from a trend point of view, technical analysts would still view this very much as a buy the dips stock. And for me, it's only if we start slipping below 700, the lows from mid-September, to that trend line around 730, does it start to look as if this trend is in trouble. So for now, it seems well supported on the downside from a trend point of view. The next obvious target are those highs, those $900 highs from January of this year. That's the next obstacle. We did see a fairly deep sell-off from those back towards 550 in March and again in May of this year. If it can break 900, it's a chart breakout. It's at all-time highs. Again, it's setting fresh all-time highs. Would normally be seen as bullish for the stock. I don't think it's a great reach to start looking at $1,000 as a target. So it's going to be a really interesting one to watch over the next few weeks. Perhaps we see a bit more subdued trading following these earnings. Arguably it was running up into the earnings, expecting strong earnings. We had those earnings, so perhaps we see some quieter sideways trading. But for now, $900 remains the target. Let's see if you can break it and start setting fresh all-time highs once more. That's it for this update in Tesla following their earnings. We'll see how they do in the weeks ahead. If they can break out to fresh all-time highs, we'll come back, we'll do another update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing.
For more trading videos just like this, please subscribe to our channel.